What if I told you that you could buy a house that needs work, fund every single renovation, and roll it all into one mortgage with as little as 3% down? Most buyers have never heard of this, and most real estate agents have never recommended it. But the buyers who are using it are walking in with 25, 50,000, even 80, $100,000 in equity before they ever unpack a box. So today I'm breaking down renovation loans, what they are, how they work, and whether one might be right for you. I'm Candy, and I have been helping people purchase homes for over 20 years, and renovation loans are one of my favorite products and one of the most misunderstood. So I put this video together because a lot of buyers are getting priced out of move-in ready homes, but they're scrolling past those ugly listings that might be the best opportunity out there. So let's get into it. So, move-in inventory is tight. In Texas, there are homes that are available out there, but a lot of them need work. I was talking to a real estate agent friend of mine this weekend. She showed four houses to a client on Saturday. Two of them were in move-in ready condition. They were okay, between 200 and 200. And two of them were absolutely not move-in ready. They needed foundation work. They needed the roof repairs. The inside of the house just was not, it wasn't clean. It wasn't ready to go. So that means that 50% of the houses that they looked at weren't even in the running for what they were looking at. So these kind of homes, these fixer-uppers, they are going to sit on the market longer. They'll get fewer offers and they will appraise much lower than the other homes in the neighborhood. But the gap between that purchase price plus renovation cost and that after improved value is where buyers can really build equity fast. So let me give you an example. Let's say that you see a home that's listed for $210,000 and it needs $60,000 in work. So your total into this is $270,000. But when it's done, it could be worth $330,000 because comparable homes in the neighborhood that are renovated are worth $330,000. So that's giving you $60,000 in instant equity. Why couldn't you just use traditional financing for some of these properties? Well, they only finance the purchase, not the renovation cost. And a lot of homes won't even qualify for traditional financing as they are. But let's say that you do find a house that qualifies for traditional financing. It's in okay shape, but you know that you want to do some work to it. It needs a new kitchen, it needs updated bathrooms. You know the roof is going to need to be replaced within the next couple of years. Then how do you take care of the cost of those renovations once you buy the house? You can deplete your savings, deplete your retirement accounts. You could use personal loans and credit cards, but of course, those are high interest, short term, and tight limits. There are construction loans out there, but they're more complicated, they're expensive, and they're harder to qualify for. So, renovation loans solve all of this in one product. Let's go over a few of those renovation products that are out there. The most common one is the FHA 203K. There are two versions. There's the lighter version called a limited and the standard version. The limited version is for minor things. It's going to be more like fixing up the kitchen, replacing the flooring, doing the painting, that kind of thing. Nothing structural, nothing over 75,000. Then you have the full 203K or the standard 203K, and that will give you anything that's over 75,000 or anything structural. You can really do a lot with the standard 203K, including adding onto a house. You could add a second story. You could add an ADU, like a mother-in-law suite. So there are lots of ways to get renovations in with this FHA loan. If you qualify for an FHA loan, which has much more lenient credit qualifying requirements, then you could still buy a fixer-upper. The house needs to appraise for what the total cost of the purchase plus the renovation are. You do need to have at least a 580 credit score to get a 3.5% down payment, but it will cover a lot of things. So the big thing about this is that we're basing the value or the loan amount on the after improved value. So we're not so worried about what is the house worth right now. We're more concerned about what will it be worth when you do all of this work to the house that you're planning to do. The same goes for conventional loans. So you do have the Fannie Mae HomeStyle and there's a Freddie Mac Choice Renovation Loan. And these are very similar to the FHA loan, except that you can do some more luxury items. So you could add a pool, you could add an outdoor kitchen, you can do landscaping. So these high-end finishes that aren't eligible for FHA loans are eligible for conventional loans. You can go down to a down payment of 3%. on these conventional loans with renovation financing. Your renovation funds can be up to 75% of the after improved value. So it gives you a lot of room to be able to make the improvements that you want to make. So what's the process of these type of loans? So first off, you want to get approved for the loan that you're looking for. So if you're looking at an FHA loan, then you want to get approved for an FHA loan because we're not adding any more requirements to credit approval just because you're doing a renovation loan. It's the same credit qualifying that you would have on a regular FHA loan. Same thing for a conventional loan. If you're qualified for a conventional loan, then you qualify for a conventional renovation loan as well. So once you find a property, we're searching for something that has a good after improved value in mind. So you want to look at, what am I getting the house for now? How much work needs to go into it? And then what will it be worth when all of the work is completed? It does need to be worth more than you're putting into it to begin with. And preferably, like I said, you walk into it with equity, which a lot of my clients do. You do need to get a contractor. So we need some contractor bids. It's a good idea if you're looking for fixer-uppers to start searching for a good contractor that you know that you'll want to work with. Somebody that you have a good rapport with, who listens to you, and who is willing to work within the program. And we can talk to them about that and explain how it works and make sure that that they're a good fit for renovation financing as well. And then we order an appraisal based on that value. So we tell the appraiser, hey, here is the house that they're looking at or that they're buying, and here is the cost of the renovations. What will the house be worth when all of that work is done? You close on the home. All of the renovation budget goes into an escrow account. So we as the lender hold on to that money and the work begins. So the contractors get paid in draws as milestones get completed. So for instance, if they have done, 20% of the work that needs to be done and they're ready for a draw, we have an inspection done, the contractor gets paid. Once the renovation is complete, then you move in, or maybe you move in during the process, depending on how much work needs to be done. There's a lot of different variables and a lot of ways that we can make this work. So let's talk about some of the numbers. Let's say that you find a house for $185,000. You get bids back from the contractor at $75,000. There are some other things that we're going to add into that renovation bid. We want to add a little contingency or a cushion, for instance, to make sure that if anything unforeseen comes up, that that's being taken into consideration. But let's say our total renovation budget is $75,000 on this. So our total now is $260,000. I'm going to call that our acquisition cost. Purchase price plus renovation equals your acquisition cost. The after improved value on this particular property is $320,000. Your down payment is 3.5% of that acquisition cost, or $260,000. So that down payment is $9,100. That means you're walking into it with instant equity of $60,000 once that renovation is completed. So who is this loan not right for? Buyers who need to move in quickly, this may not be the right fit. If the house needs a lot of work, this may not work for you. If you are looking at doing some extensive renovations, then you may need to live somewhere else for a little while that work is being done. Buyers who want to be their own contractor, not a good fit. It's not going to be allowed. We do need a contractor who can be vetted out and make sure that they understand the process and that they can handle the way the program works. Buyers who want very high-end luxury upgrades will not qualify for the FHA version. If you want to go that route, if you want to add a pool, an outdoor kitchen, some landscaping, you'll need to be able to qualify for a conventional loan. And buyers who want to flip quickly, this is an owner-occupied loan for FHA. Even for the conventional loan, it actually qualifies for primary homes, second homes, and investment properties. But by investment properties, I mean properties you plan to keep and rent. So it's not for fix and flips. So here's what we've covered. Fixer-uppers are an underrated opportunity out there right now. FHA 203K, Fannie Mae HomeStyle loans, and actually we didn't even get into VA renovation and USDA renovation loans. Those are also available, but they allow you to buy and renovate the loan with one loan, renovate the house rather, with one loan, one closing, and as little as 3% down. The loan is based on what the home will be worth after the work is done, not what it looks like today. And the equity you can build with this strategy is real. So if you've ever looked at a fixer-upper and you thought, I love this, but I can't afford to fix it up, then let's talk. Drop Reno in the comments and I read every single one of them. And if you know someone who's been house hunting and coming up short on move-in ready homes, share this video with them. Let me know if there's anything I can do. If you want to talk a little further, you can book some time on my calendar.